Hope everyone's doing well. Welcome back to another video. So, I started the last video by saying it's been a little while since we made a trade breakdown. Literally made one about half an hour ago. You guys probably saw my message. For some reason, the whole 24 minutes audio didn't record, which is extremely annoying. So now I'm gonna have to spend the next however long trying to remember exactly what I said. But cool. So this video, what we'll do is a quick trade breakdown. Today we took DXY longs, EU shorts. Right, and towards the end we'll also do a midweek outlook. Okay, it's Wednesday today, halfway through the week, and just a sort of expectation and what's changed from the sort of weekly outlook. But cool, let's get straight into it. So Wednesday, right? Of course, as you guys know, primarily New York trader. So we did have a big news release for London Open Kill Zone, but the main focus for us was actually on the USD orange folders. One thing that I did want to touch on, a lot of people, I'm not sure why, are sort of, I'm not sure if the right word, but I would say sort of neglect the orange folders to an extent. Now, the thing is, right, when we have red folders, I feel like it's a given. Everyone's like, okay, yeah, red folder, we're going to get a move and whatnot. Yes, of course. But the orange folders can provide too sometimes. It might not be as sort of concrete where every single orange folder does it. Of course, there's some that do near enough nothing, which is fine. But when we have an expectation for price, right, and you guys will see, I sort of build the framework for you on the chart, and you have an idea of like, okay, I want price to do this, do that. We usually have to pair that with some sort of timing, right? And the timing can usually mean like, okay, we're approaching X news event, and if the expansion was to happen, it's likely to happen from here. Or if the expansion has already begun, the news event is likely to add to it, right? In today's example, it's a thing of the expansion was started by the news. So let's get into it. So just for the weekly candle, as you guys know, we've got a very large fair value gap. You guys can see I've marked out this frame. Come back to that later on. But essentially, we had a lot of room for DXY to move higher, come down onto the daily time frame. As we can see for this week, the Monday moved straight up, taking the previous weekly high. The Tuesday then came in, which was yesterday, taking the previous daily high, but having a very, sort of ambiguous close. It's not, telling us anything clear. And then, of course, today, it's been a relatively upwards candle, but more towards the later end of the day. 4 hour. What's the sort of expectation before we zoom in? Accumulation, we know we're in the manipulation phase, and just as we explained, we know we have room to move higher. So cool. Let's start off by marking out the previous daily high, first of all, which is this candle over here. Done. So now let's talk about our specific candles, right? Zoom in a bit. So this candle going, as you guys know by now, of course, when we go into New York Kill Zone, which is this candle over here, we always like to look at that previous 4 hour candle and see how it's shaping up for the next candle. Now, this candle is not a great candle by any means, but if we look at the sort of order of events, especially when we go on the lower time frame in a second, is we can see, it's open, it's come down, it's manipulated, it's taken a bit of sell side liquidity, traded back into the range. And when I look at where we are and we're going into New York Kill Zone, this is where the sort of logic kicks in, right? It's not necessarily, we haven't come from a higher time frame PD array, blah blah blah, getting too sort of technical. This is more sort of, I would say, common sense or logic, right? Or practicality. From here, if price was to target something, in my eyes, as previous daily high, we consider the proximity, right? Price is much closer to this than targeting some of these sell side targets down here. Right, so if it was to kick some way, I would expect that it takes this high. Right, I would expect that it takes this and then maybe we might even go down. Right, but it's a good sort of short-term target to work towards if, lots of emphasis on if, a chance is offered. Now, when we come on the lower time frame, on the hourly, very similar to the 4 hour, nothing too crazy. 6 a.m. candle, given that sweep, trading higher, going into the session, the session builds up. We'll go to actually jump straight into the 5 minute, and what we see, right, and of course we don't like to use these London Notch swing points, right, but nevertheless this is price running sell side liquidity. It ran the previous 4 hour candles low, engineered a good bit of buy side liquidity here, right? And as you guys can see, AMD reversal, big kick up, tracement, next kick up. But when we go into New York kill zone, we're not really interested at the stop, right? It could have easily come around this low. But again, emphasis on what I was saying earlier, we said if a chance is offered to go higher, then now it starts making logical sense, right? We've, engineered, accumulated liquidity here. Now gone around sell side, we're having a reversal. There's some, buy side for us to target here, and we have a obvious buy side target over here, right? As previous daily high. So knowing all of this, and then you come into New York, bit of accumulation, OTE, impulse. Right, it does look like, price is now going to start delivering higher, right? But we're not convinced just yet. We're not looking for the entry straight away. We got the news at 12:30, which is this candle. So this is what we waited for. Now, in the mentorship chat, I said to everyone, price action is boring here. Just pretty much what I just said to you guys. If I had to pick something, I think, it's likely previous daily high would get targeted in the short term, right? It makes for a good short-term target. Now, when you combine that with the sort of lower time frame structures and what's being shown to us, it starts to make a bit of sense, right? But even then, we're not too eager. We want to see price kick this way for us to entertain this. Now, what's happened is, we have this range. Price starts retracing, comes to the OTE, right? This is one order block being created, and then after this, we anticipate the expansion to start. News drops, pushes us up, and then the second candle starts pushing us up. Now this is approximately where we entered, right, on this candle. Now the truth is that I was going for the sort of buy stop type entry, but over here, the second upward candle to me was convincing enough for me to think, what, entering here would, harm that RR quite a lot. That's 1R versus entering here is a solid 2R, right? And that's not a very big difference in terms of move. Now, we enter here, right? So market entered because, again, like I said to you guys, we anticipate this is the order block created. News has now placed a specific swing low, or rather confirmed it, and now we expect to move away. Now, that first 5-minute candle after entering the trade is horrific, right? It's very scary. I'm sure everyone's holding their breath. Ran almost to the stop loss in this one big candle. But I was confident that, if price is going to run previous daily high from here, I would want that news low to hold. Usually the swing points in and around news are significant and they won't get violated, right? Now, price is given that kick up, retraces very deep, and then runs back up. Perfect. Goes into profit. We can breathe easy now. Bit of a retracement, and then prints this, beautiful candle. 9:15, 1 5-minute candle completes about more than half the move, I would say, right? Runs higher towards the target, gets extremely close, turns around, and we managed to exit a little early. I believe we exited roughly somewhere here. And where this trade would have been about 2 hours, we managed to close out for like 1.8. I would assume 1.7 maybe for some people. So, of course, that explains the sort of general thought process behind the trade. Holding the trade at the start was a bit difficult, especially with that first 5 minutes. But as you guys will see in the mentorship chat with the screenshots I've sent in the main chat, we weren't too concerned, right? If price had hit me out there when we took a minus 1% loss, then so be it, right? To me, the framework was clear enough, and the side to be favored would have been higher. I wouldn't have anticipated this to get swept, right? It's not like the swing point was leading into any sort of fair value gap or anything significant that price could easily come and take it. Now you start again that move away based on the PDRA matrix. We anticipate expansion higher. What happened is we got quite a deep order block created. Expansion, order block, expansion. Then almost straight to take profit. I think about roughly about an hour in the trade. 8:35, exit around here, 9:35. Yep. So with this setup in general, right, I had a lot of people, I guess, to simplify some of the questions being asked was along the lines of what's the sort of conviction behind the trade. Now, the truth is, right, let me give you guys an example. I had somebody in the mentorship send me a trade a couple of days ago, and he explained this framework, and it was something that I hadn't sort of considered. Not considered in the sense that I didn't see it, but rather I saw it, but I just, I didn't have enough conviction to hit that. But he's hit that, and he's, of course, won. I sent it to me and I said, that's great. Now, what I'm saying with that example is that sometimes you will have conviction in certain things and other times they will have conviction in certain things and you won't. That's why it's very important to be an independent trader and, work towards that. That's even in the mentorship, I say that to everybody. Like, of course, I'm there to give a helping hand, but it doesn't mean, oh, you only listen to me. You need to work on that. You get me? Like, you should be doing your analysis, and it's sort of like having, what do we call it? Stabilizers on the back. Have them there. Eventually, you take one off, which could mean maybe you stop checking the chart. You only check it after. Eventually, you take both off. Have a go at just doing it, and so forth. Right? There's different ways to go about it, but essentially, the idea is to build that independence in your own trading. And now, another very important thing is sort of context. Somebody asked me in the main chat. He said something along the lines of he's getting out of drawdown, so he didn't hear because he wasn't didn't have enough conviction in the trade. That's perfectly fine. If I'm in a position where I'm sort of vulnerable, I can't afford to take a loss, and I see this setup and I think, you know what, this is not a good setup, right? It's not good enough for me to think I'm in drawdown. I don't want to risk money on this and potentially lose, and I'm not going to take it. That's perfectly fine. Even if it went your expectations, which I'm sure it did for some of you guys who would have seen this, and you didn't take it, that's still fine, right? Because there's always going to be another setup offered. You don't want to hang on to one setup you missed too long, or then try far more in later, or all of these silly things. Just see it as, there's times you're going to take something somebody else won't, times where they'll take something you won't. But that doesn't apply to only wins, it applies to losses as well, right? So remember, everything balances itself in that sense, right? So don't get too hung up on, I missed this, I missed that. You might have caught something, I've forgotten you caught that, but somebody else didn't catch it. You get me? So, of course, that's just a little bit of perspective. It doesn't, directly tie into this trade. I think it's a decent setup. I would never put out a setup that I didn't have, conviction or faith in, because that would just be silly. Because then why are we trading? Why are we risking money on that? In this scenario, I think it only made logical sense for price to run higher. We took the entry. Maybe the entry was a, little bit premature, but it managed to work out. Even if I had entered later, the idea would have still been the same. We would have protected the same low. So I'm happy with how we dealt with it. And of course, price went quite close to take profit, reversed, and we, exited on that reverse. The reason we exited, I know some people might have been, waiting for this 5-minute IO Fed or back up. I know conditions aren't great. We're in, or rather coming out of a, consolidation. If we zoom out really and truly, price action is still quite bunched together, even here, right? I know there's a chance price can easily just come down, make equal highs, equal lows, reversed, and that's practically what it did. Honestly, I even said it in the chat that I don't want to gamble on it. There's a chance DXY is going to leave equal highs here and just turn around on us. So let's just exit here. If we exit here, it's like 1.8R. If we hit the take profit, I believe on EU would have been a bit more. I think it would have been about 2.4, 2.5. And as you guys can see, horrible reversal snipes our actual stop loss, reverses back in, back down, and then big move later in the day, I believe due to some sort of tariff announcement by Trump. So how does this line up on the Euro USD? Perfect. Already marked for us. So what we have is, this is the high, mid-session, swing high that we're using. Price starts to move away. We market enter somewhere around here on this specific 5-minute candle, 835. We cover the most recent high, which is over here. From there, we're short, and we had a target which was 657, something like that. 657? Yeah. So, and as you guys can see, price gets very close to it and turns around. I thought it was a little bit further away. I thought we were about 4 or 5 pips. We actually came literally within 2 pips of hitting take profit and reversed. And where this line I've drawn out is somewhere around here, right? In this candle, as it retraces against us, we've managed to exit the trade. And what was good is Euro GBP was actually on our side. So even if somebody saw the message, sort of slightly late, you would have had a good chance to exit the trade and still be up even though DXY had, retraced a little harder, EU managed to hold on for a little bit longer, right? So all in all, not bad. I managed to close this for a 1.8. I'm assuming most people would have had about similar. If it did hit the whole tape profit, it would have been 2.5, but it's not the end of the world, right? Like I said to you guys, considering conditions, considering all of these things, it's not the worst result, especially considering it reversed and hit the actual stop loss anyways. So cool. Last thing we'll touch on for the setup, just quickly, is the thoughts on Euro GBP and why I picked EU. So I'll leave this on. I know it's a little bit messy, but essentially London had a very large move up on the Euro GBP. To me, I had reason to believe that this was manipulation. I'll get into why that is when we do the outlook part, but essentially from here, I knew that, even if my bias was wrong, even if this isn't manipulation and we're going to go all the way back down and we're going to be bullish from here, I knew the likelihood is we're going to come hit this 1 hour fair value gap, right? I want to see price hit this and move higher. Now, what actually happened is, on the 15-minute, all of New York practically consolidated. When we enter the trade, it sort of went our way, but really and truly, that's just the consolidation here, right? So just ended up working out in our favor while we were in the setup, if I'm being honest. Didn't really do much, which is not a bad result for Euro GBP. It means both pairs can move sometimes. And we were waiting for it to get to 1 hour fair value gap, which is around here. Didn't hit that, but still, of course, at the end of the world, because it did manage to work out. So cool. Hope that answers all of the sort of questions off the top of my head. I know you just quickly look through the chat. Someone called Uzi has asked a great question. The H4, so the 4 hour candle direction was choppy. They don't have any sort of clear areas to stage the trade off or fair value gaps nearby. Very cool. Now, how do you know it's a good short-term target? Again, I think I've relatively answered the question there. In terms of short-term target, the way it was set up, seeing the sort of framework on the lower time frame where you had the sell side sweep, you've had the kick up, you come into New York, price has now got that second leg, and then of course news has come and also started pushing up, and the next logical target is the previous daily high. I think it just makes sense that price will go hit the previous daily high. I know it swerved it just slightly, and in this scenario, just being transparent, I would say we got, I wouldn't say it's completely luck, because it was a logical decision to make, but maybe another day we wouldn't have said, oh, let's cut it. Maybe we would have said, okay, 5-minute alpha, it's going to go higher. I would have got smashed that break even. Still not the worst result, because, by the time price had moved higher, one thing I didn't mention earlier for you guys, the second we printed this massive candle, this big one here, I said to everyone, yep, break even. I think I said 1.09 or something like that on EU, which was break even on the trade. And, risk was off the table and we just left it to run. Right. But yeah, in the scenario, in regards to that 4 hour in specific, this is why, I believe sometimes focusing too much on just a given time frame can be a bit confusing. I understand why people do. Even me myself, I do really like the idea of having a clear 4 hour read, but with your kill zones and your sessions, I believe, sometimes you have to be a bit versatile. To me, this is something, if I look at in hindsight, it looks extremely textbook, right? You have accumulation, liquidity being engineered, reversal, second leg in the kill zone, you get a chance to enter, price makes the run towards a drawn liquidity. If you saw this in hindsight, you'd probably say like, well, not bad setup at all. When it was forming, I understand it was a bit choppier, it's a bit harder to see, but it circles back to that idea of if you don't have conviction, if you don't have that good read on price, it doesn't fit your criteria, perfectly fine. Just don't take it. Right? Doesn't matter. It's never the end of the world if you miss a sell. So cool. Let's do our little quick midweek outlook. Let's have that one. So cool. We know we've got quite a large range here, price. And I've just marked it out just for the sake of reference. I don't think we're going to get, some sort of massive OTE or anything. We'll actually zoom out to the monthly. I don't like how the monthly is necessarily shaped up right now. It makes things a bit more conflicting for us. Our overall bias is that this is a move to these, right? That's a sort of mid/long-term bias. Price closing like this, respecting fair value gap 1, fair value gap 2, would make things a lot more interesting and confusing. However, right? What we need to consider when we come to the weekly is we've had a very large move down, right? Even some of these candles that we're printing here, compare them to the current candles that are printing now. These are still very consolidated, right? This is nothing crazy. This is just what we call a bit of relief, or, you know, in simple terms, a retracement in the markets after a big move down. It's expected. Come down to the daily, and if some people are thinking it's a reversal, I can understand why they're thinking that, but I'm not convinced. There's not a single daily fair value gap printed. Last fair value gaps, the last displacement printed was this way, right? If we zoom out, it's usually the sort of signature you see in the market maker somewhat, which is what we're hoping that this is, all the way to the lows. And if anything, this is a great, you know, move up to position ourselves for continued shorts lower. You know, if anyone is a swing trader, this could put you in a good position, right? Drop another time frame. What we see, we still have that AMD in play, clear accumulation, right? It's left relatively equal lows, and we're in that manipulation phase. And we know this manipulation can extend a bit. We spoke about this in the weekly outlook. We know we have, you know, very big range to retrace into. We have a very big area that's, you know, that needs to be balanced, right? So we knew price had the sort of possibility of moving up, but, you know, even after taking that into consideration, the overall idea of which way the distribution will be, I think that we already engineered this sell side that is already ready to be taken. Of course, we've got the relatively equal lows, and from here we just wait on the SMR. Now, how would you go about the rest of the week? I think tomorrow, the most important news event, GDP with unemployment claims, they drop at the same time, so it's fine. From here, you know, very similar to today, where we didn't have sort of maybe concrete bias going into the day, but the, you know, it sort of became clear as the session unfolded. And tomorrow, I would anticipate something similar, most likely, right? We have the news in the middle of New York kill zone, and you may not see much before it. Now, what I would do from here, right? I think the mentorship chat specifically, we're in a good position where we've got the win. So if something clear isn't presented, then, you know, we're hands off. We're not too concerned if it's not something clear. What I would focus on is looking for bearish signatures from price. Consider the fact that, you know, tomorrow is a Thursday. This week, essentially, if we, from about here, we've essentially only moved up. We haven't moved up a lot, but we've only moved up, right? Thursday could cap the end of this range. What I mean by that is Thursday could basically put in the high of the week, and then from there is the reversal and price starts trading back down. What we want to see is a good kick on price. If we can get that, right, and price can, you know, start showing us some bearish order flow, then this is a very easy bias for us. Distribution this way. That is what I would be waiting for. In terms of continue to long price, there's nothing, you know, in terms of targets that I would say, oh yeah, let's go towards this. We can sort of play towards the equilibrium. Price might offer this, but considering, you know, where we are in the month, the end of the month, I would prefer if price did not go all the way back up here, right? Only because that would make the monthly close very tricky. I think if anything, where we are in this sort of AMD, we've got the accumulation, this manipulation so far has taken the previous weekly highs, tapped the daily fair value gap. We've now come and swept the previous daily high again. I would say it's, you know, probably ready for that reversal if it's offered to us. So that is the sort of play that I would be going for, seeing if that is given to us tomorrow by GDP. Getting very paranoid every time I accidentally touch my mic, just in case somehow it doesn't record the audio again. Really hope I don't end up with that. So very similar on the US 10-year, right? We wanted to see this weekly candle sweat. Price has run above this. We knew we could, you know, dig into that equilibrium area. Hasn't done that yet. It's possibly on the cards, but very similar to DXY, we essentially just want to see big AMD distribution still towards the sell side. Right? Same scenario. If, of course, the US 10-year reverses from here, makes things a whole lot easier on the DXY as well. Your GBP already marked for you guys. As I said, I've recorded this video earlier, trying to keep it a bit simpler this time. We have the weekly order block to watch for. Price has moved lower. This is a big weekly fair value gap that we're currently in. Look at the daily close for today, which is closing at 56 seconds. The next candle is very likely to head low. I think we dig into this weekly order block and we may even just sit here for a little bit. But once we're here, look for any sort of bullish signatures in price. If there's something, let's just say, for example, a 1 hour market structure shift, then it's likely from here, price can then, start an expansion down this way. Right? We have somewhat of an AMD here, I would say. Big accumulation, manipulation down into this sort of, deeper into this range. And if you can get a good kick up, then you can make a good case for distribution this way. Right. Cool. Not much interested on Bitcoin. I'll be honest, not a whole lot to say. All it does look like is just building a large accumulation. Again, we spoke about this being accumulation, manipulation, potentially distribution this way. But from the looks of it, it's just turning out to be one big sort of channeled consolidation on its own now. So no high hopes. I think we need some sort of big news driver to come in and push us one way or the other. And yeah, so that's one thing I forgot to touch on. If anything, I'll touch on this more in the weekly outlooks, but we're approaching the end of the 3-month candle. It's definitely something I'll be keeping eyes on. We've got 5 days left, and especially this one on S&P is shaping up quite nice. Monthly, quite same, hit that discount level, moved off. Weekly, where it starts to get a little bit confusing. So of course we got this large wick coming from the discount, price moved higher, inside candle accumulated. This week's candle so far has hit a weekly fair value gap and moved away. Right, so it leaves us in a bit of a awkward scenario. Is this the low of the big range, or is this simply a retracement to carry on going low? Now, we said this in the weekly outlook. When you have such a strong move down and you have all these down candles, it's only a matter of time that you start seeing some up candles to sort of balance it out. Whether that's a reversal or a retracement, either way you will see something, and that's what we sort of have here. From the looks of it, I would say it's quite ambiguous. We wanted a run on these lows, right? We wanted to see the sell side tag and then price go higher. What I would do, especially considering we're coming from that weekly fair value gap, is pay a lot of attention to this current daily. See how we treat this. This is, very nice, flat fair value gap. Price traded into this. If we can get some displacement higher from here, it's likely we can start seeing us trade through that weekly fair value gap. If not, then it's likely this could be a weekly order block and move back down. Again, there's a big driver tomorrow, which is GDP. I do think it'll add a good bit of clarification to this chart, especially since we're coming up with inflation. So the base case scenario that we sort of wanted to see was market maker buy model. We haven't had the clearest reversal, but I also wouldn't say it's the worst reversal. There's a clear first leg, there's a kick up when that second leg. If price can now carry on and give us one more break of structure, I would argue it's very likely we see that move back to these highs, right? But that is it, guys. That is the trade breakdown for DXY and EU and your midweek outlook. I hope I've answered all the questions you guys had. If I have missed anything, or if there's anything you'd like to ask now since I've made the video, just drop it down below. Make sure I get back to